Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the Forex market. So today we will take a look at the Kiwi dollar. Just because on the Kiwi dollar we have clear patterns that's worth of our attention. It might be really interesting to trade it in a nearest time. In general, overall Kiwi dollar performance stands in a row with other currencies such as Euro currency and Great British pound, but they're just, the swings are shaped in a way where the patterns could be seen better, while on the Euro currency, on the cable, they're a bit skewed and not really very good looking. In general, market currently stands in the frustration. So recently the 2-year bonds have played back all the advantages that have been achieved the day before. So if you take a look at the yield, we're dropping to the 3.8%, and right now it goes back to the 4.4. Actually, different banks makes different forecasts concerning the Fed policy. For example, Namur said that they expect that Fed stop quantitative tightening right in March, but more or less concern stands around the rate. So 25 basis points probably will be achieved, just because if Fed do nothing, it just could bring more panic on the markets. So it just could be the signal that everything stands so bad that Fed can't even hold a 25 basis points change. So from that standpoint, currently the majority suggests that we will still have the 25 basis points change. But in a longer term, currently it's very difficult to make forecast on the performance, just because we do not know what the particular program by the Fed stands right now. So what they would like to do. My suggestion is that all this stuff with the bankruptcy of the Silvergate, with the bankruptcy of the Silicon Valley, yes, these moments have relation to some other topics, but in general this was planned action, and this action is used to consolidate United States banking sector, and the second, led Fed to stop tightening policy and put the responsibility on the banking system. I already talked about this, and we will also put this in the Telegram recently. If we will follow this logic, it means that in the nearest term we probably will not see effect of the quantitative easing. It's just inflation probably could remain at current level or even could keep going lower. It's just because effect of the interest rates is lagging. So for the 6, probably 8 months, we still will be under impact of the high rate that is just need to catch up the current moment. And after the 6, maybe 8 months, we start getting the first fruits of the possible quantitative easing that Fed could turn. So from that standpoint, at the first stage, it might be just euphoria on the markets, just because everybody will see that inflation is dropping, Fed once again start printing money, everything just great, and we could get some rally on the risk assets, in particular speaking on the stocks. But this will be just the short-term period before the situation will become worse. So, but that's a bit different story. Speaking about the current situation, so definitely the recent steps from the Fed is a bit bearish for United States dollar by many reasons. We will see what Christine Lagarde will tell tomorrow on the European Central Bank meeting, whether they will review their policy as well. But if not, that will just even increase the bearish effect on the dollar probably. And from that standpoint, in the short term, it seems that dollar really could become weaker. So on Euro currency, we're still watching for some upward continuation, but as we said yesterday, we are watching for a pullback. Gap is infilled, here is the strong support area, and actually on the Euro currency we're just following for the same tactics that we are talked about. Now if you'll take a look at Australian dollar in general, New Zealand dollar, in general it has the similar direction, but it is forming better patterns. For example, on the daily chart, you easily could recognize this pattern. And as you can see, just perfect symmetry here. The same bottoms of the shoulders. The uniform trend has turned bullish on the daily chart, and in fact we're coming to the point where we could consider possible taking the position, because on the 4-hour time frame chart you already could recognize here minor head and shoulders pattern right on the bottom of the right arm. So if we'll take a look at on the 4-hour time frame chart, you will see it better. And here it is interesting to watch for 6150 area. This is 618 support, which is actually similar to the bottom of the left arm. And today we will get retail sales, so volatility might be high, and here is the level that we could keep an eye on. Because if we will be right on overall direction, taking position here with the daily chart position, it might be this A, B, C, bottom D pattern. So rather extended performance might follow on the New Zealand dollar. And the risk that we could take is just based on this head and shoulders pattern. This will be approximately around 75-80 pips if we will place stop below these lows. Maybe later you will place stop even closer if you will get some clear reversal patterns around 618 support on lower time frame, for example on the hourly chart. Here is also some pattern might be formed, and you could stick directly with this pattern that lets you to place stop even tighter. So we think that the current situation looks interesting. Similar performance you could find on cable, but their patterns to be different. On the Japanese yen, it's also some retracement from the predefined level that we have mentioned previously. So everywhere we in general see the signs that first we should get some pullback, but higher time frame tendency mostly stands in favor of dollar rivals. So dollar seems in the short term could become a bit more weaker, and these patterns that we have mentioned probably could work.